Hey everyone, welcome to another video on my channel. And in this video, I'm going to tell you why I expect Nifty to head towards 25,000 in next 1.5 to 2 years. A lot of people are expecting Nifty to crash just because it has hit a all-time high. But my opinion is little contrary, where I'm expecting Nifty to actually rally 20 to 30% from here. In this video, we are going to go back to past. From 1990, we are going to see chart of Nifty and how Nifty has behaved under different phases of market. And then we are going to bring some correlation on how Nifty can behave after this breakout based on the historical data. I hope you find this video informative and useful. If you are liking the content on this channel, do not forget to hit the like button, share this video, and also hit on the subscribe button. It is just a minute of task for you, but it will make a huge difference to us. So please do support us by hitting the like button. Now we'll be quickly moving on to the screen recording and seeing why exactly I do believe Nifty can head towards 25,000 in next 1.5 years. Hey everyone, welcome to another video on my channel. This video is really important to be done at this point of time because Nifty just scaled to a new all-time high last week. Nifty almost touched 20,000 and slightly came down, and we can see that now a lot of investors are actually getting scared just because Nifty has hit an all-time high. So many people are expecting as much as 10 to 20% correction in Nifty from this particular point. But my view is Nifty can actually head towards 25,000 in the next 1 to 2 years. So this is not just a random claim which I am making, but I will be showing you historical evidence or facts. So we'll be going back to history and trying to see how exactly market behaved under different phases, right? And I'm going to tell you why it is a reasonable expectation for us to expect Nifty to scale up to 24 or 25,000 in the next 2 years. Let's now start by analyzing Nifty since its inception and try to see how exactly the market has behaved under different phases. So right over here, I have opened 1991 or 1990 since when the Nifty started trading, and this was also the period of Harshad Mehta bull run. So you can see that when I actually measure this, Nifty surged almost close to around 300% just in matter of 2 years during Harshad Mehta bull run. So once the bull run came to an end, markets almost corrected around 50% from the high. So then we went on for a long consolidation of almost around a decade. So you can see the high which was made in 1992 was taken out almost after a decade, that is in the year of 2000 when the tech boom started. So just because the market has surged almost around 300% in a very short span or in just around 2 years, the market consolidated for 10 whole years without giving any returns. And post that, the market actually broke out and it was about to head higher. Just then, we got the tech bubble burst, and because of which the market ended up correcting again. So, again, we entered this phase where the market was trading between the range of 800 to 1300. It was almost close to 15 years from 1992 to 2004 2005 when the market again broke this particular range. Almost around 12 to 15 years, market traded without giving any returns because earlier, just in the matter of 2 years, market had given more than 350%. So now, market had consolidated for 12 whole years without giving a single percent return. And on the other hand, Indian economy was booming. So it was not long before the stock market would actually catch up to the fundamentals. And you also know for a fact that if this time the breakout came, it was going to be massive. So once the breakout came in 2003 or the end of 2003, we saw a fantastic rally because the market hadn't moved anywhere at all. So this rally was again almost close to around 300 to 400%. So you can see Nifty broke somewhere close to around 1350, and from 1350 the market surged all the way close to around 6000. So it was rally of almost around 300% just in the matter of 3 years, from 2004 beginning or 2003 ending to 2007. Just in the matter of 3 years, we had seen a rally of around 300%. So then, as we all know, came the big crash of 2008 because of the financial bubble burst. And once this crash came, again you can see same thing what happened to Harshad Mehta period. We went into a long consolidation. So this time you can see again we ended up consolidating from end of 2007 to almost around end of 2013. That is close to around 6.5 to 7 years. So from the high, the market had corrected almost around 56 to 57%. And from this particular point, we consolidated for 7 years. So one thing what you're able to observe is whenever market makes a big move in a very short span of time. So for example, we saw that during Harshad Mehta time, so where market went 300% in just 2 years, and the market consolidated almost for an entire decade. So again in 2004, we saw markets going 300 or 350% in just 3 years, and again the market consolidated almost for 7 full years. And finally, around 2014, we saw a multi-year breakout. So that is after 7 years, we again saw fantastic breakout. So around this time, once the breakout came, you can see that we saw a slow and steady move of close to around 40% in the next 1.5 years. So end of 2013, we broke out, and by 2015, we saw a move of close to around 40%. So this move was slightly different. We saw a slow and steady move of 40% in 1.5 years. So post this, again we saw a small correction around 2015 because the move was small. So unlike the previous move of 200-300%, because this time the move was small, the correction was just around 20% and not 50% or 40% previously. So we saw a 20% dip from the high, and markets went on for a consolidation phase of 2 more years. So you can see from 2015 till almost around 2017, 2 years market gave no return. So breakout came, next 1.5-2 years market surged 40%, and after that 2 more years there was no returns. And post that, again we made a breakout. So once the market actually broke in 2017, it broke the previous high, which was around 9,000. From 9,000, the market rallied almost around 30% in just 1 year. So you can see every time we are breaking out of the previous high, the market is rallying on an average at least around 30 to 40% in next 1.5 years. So from 2017 March to September, you can see that we had rallied almost around 30%, and market reached a high of close to around 12,000. So again, it was a 30% move. Post that, the market again consolidated for 1.5 years, giving zero returns. The same pattern can be observed here. So 2 years, the market gave no returns. So first a 40% return, 2 years, no returns, and again here a 40% return, 2 years or 1.5 years, no return. And just as the breakout came, unfortunately, we had the COVID crash. So the breakout came here and we had the COVID crash. Because it was a news based event, we corrected close to around 35 to 36%. So you can see from the high, we had corrected almost around 35%. So then, luckily, we were able to recover very quickly from the COVID high. And once the COVID high was taken out, so you can see if you actually measure the time between this, so it is August 2018 to almost around November 2020. So almost around 2 years of consolidation, we finally broke the previous high and we started heading higher. So once we broke from this previous high in November 2020, so in just 1 year, so you can see that hardly by December 2021, so we were trading around 18,400, 18,500, giving a return of 50%. So you can see that the trend is more or less the same. So every 1.5 years, we are giving a return of close to around 35 to 40%, or sometimes even 50%, and then consolidating for 2 long years. So after this move was made, we consolidated for 2 whole years from September 2021 to almost around June 2023. So now I have just changed this to weekly chart, and you can see that after 2 long years of consolidation, we finally broke out of this range in the month of July. In my opinion, from this particular point, we can surge at least around 25 to 30% in the next 1.5 2 years. So that means by 2025, in case if we are surging around 25 to 30%, so let me just show you where it can lead us to. So from this point, if Nifty was to surge around 25%, so that would actually take it towards 23,500. And if it was actually about to surge by 30%, it would be going or heading towards 25,000. What is the takeaway from the study? Whenever the market has surged anywhere around 350 400% in a very short span of time, say somewhere around 2 or 3 years, we have seen post that the market actually goes into a long phase of consolidation. So in 1990s period, we saw market consolidating for almost around a decade. In 2007 2008 period, we saw just because the market has surged around 300%, markets consolidated for almost around 7.5 years. But post that, we saw markets made steady move once it broke all-time high and it started heading higher. It made a steady move of 30 to 40% in the next 1 to 1.5 years. Going by this logic, we have just come out of consolidation, and right now fundamentally everything is looking really good for India. In this video, we just covered the technical aspects of things. So I'll make one more video, the second part to this, where I'll be talking about the fundamental aspects of things. So when you look at the fundamentals of Indian economy, it gives you a even better picture, even better reason why Indian markets are just beginning to boom. So we will be considering a lot of factors from GDP or per capita or even to inflation and everything about the world economy in the next video. I hope this video was insightful and also useful. Again, in my opinion, we must be going towards 24 or 25,000 before we even hit 18,000 again. So I might be totally wrong. One thing what you have to note is this is markets. Any news can come out anytime and the markets can fall or correct. So this is just a personal opinion and I can go absolutely wrong. So things can turn around just within fraction of a second in the market. But going by the historical study, it does feel that we have just come out of a consolidation and we have headed for a pretty big upside. So I hope this video was insightful. If so, then do not forget to hit the like button, share this video and subscribe to my channel. Thank you so much for joining, guys.